Bigger loans generally do mean bigger discounts, and banks do promote that. The higher the loan, the higher discount you have. For an example, if you have a $400,000 mortgage, you might only receive a 0.6% discount, where if you have a $700,000 mortgage, you might receive 0.7. That extra 0.1 could save you anywhere from $300 to $400 a year in extra interest payments. There are also competitive fees which you can negotiate. The higher the loan, sometimes the lower the fees and the costings involved as well. It's always good to engage a mortgage broker in this instance, because they know which banks are sort of looking at pricing and getting discounts at different times of the year, depending on their workflow and so forth. Different clients will have different needs, which means different loan structures. There are a variety of combinations which you can do between fixed and variable rates, as well as discounted rates. This also entails, also borrowing in personal entities, and maybe even borrowing in companies or trust structures as well. So engaging a mortgage broker will help assist you in creating the best structure for your needs moving forward. Lender's mortgage insurance is something there to protect the banks in case you default on your mortgage. Most clients think it's something for them it's a protection for them in case they lose their job and so forth, which I can assure you is not the case. Mortgage insurance becomes applicable whenever you borrow over 80%. One way of avoiding mortgage insurance is keeping your loan at an 80% level. There are also other ways of looking at avoiding it if you do need to go above that, is maybe bringing in a family guarantee where your mum and dad assist you solely with an additional security to help you borrow that little bit extra and to help avoid you paying the mortgage insurance. You could save well into the thousands, and in some cases well into the tens of thousands. It varies depending on how high up the scale you borrow, from 80 to 95%, and also depending on your loan amount. Someone borrowing 400,000 isn't going to be paying as much as someone borrowing 8 or 900,000. Look, it's always a good idea to look outside the big four banks. Someone who's might have been casually employed for a couple of years might not fit the model of a major institution, but they might fit the model of a smaller bank or a second-tier institution. And a mortgage broker will be able to tell you who's credible and who's not. A lot of the smaller tier lenders have some very competitive pricing, as well as some policy, which tend to be more favourable to the consumer. Make sure your broker works hard for you. He should be out there negotiating the best deal for you in the market. If you're getting a standard loan from a broker, then he hasn't done his job properly. In most instances, you should be at least getting a discounted rate, and in some cases, maybe even looking at getting some of your fees waived. I'll give you an example. For instance, if your plumber was going to fix your sink and he needed a part for it, would you be sending him down, or would you be going down to the trade store yourself? Who do you think will get the better deal? Same with mortgage brokering. Do you think you'll get a better deal going to the bank negotiating on your own, or would you engage the services of a professional who'd be able to do that for you?